Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The rupee recovers after breaching the psychological 90 to $1 barrier for the first time in history amidst incessant dollar buying by foreign funds. Dealers cite limited intervention by the RBI. The rupee has now fallen by almost 2% versus the US currency in the last 2 weeks. The government's chief economic advisor, Anantha Nageswaran, says he's not losing sleep over the weakening rupee, expects a rebound next year, adding that current levels are not hurting exports or inflation. The Sensex and the Nifty end marginally in the red after a late recovery. The Nifty drops below 26,000. Mid-cap see sharper cuts today. E-commerce platform Meesho's 5,400 crore rupee IPO fully subscribed on day one. Retail portion gets booked in the first hour, but higher allotment to local funds draw the ire of some global investors who walk away from the anchor book. CNBC-TV18 News break confirmed just months after getting relief from the Supreme Court, JSW Steel sells 50% stake in Bhushan Power to Japanese conglomerate JFE for over 15,700 crore rupees. After backlash, a U-turn by the government on Sanchar Saathi app withdraws the directive to phone makers, making it mandatory to preload the state-owned cybersecurity app on phones. India and Russia all set to bolster economic ties when President Putin arrives in New Delhi on a state visit tomorrow. India to push for increasing pharma, agri and textile exports. Prime Minister Modi and President Putin would also discuss a free trade agreement which could be signed in the future. The Kremlin calls the meeting between President Putin and US envoys Witkoff and Jared Kushner as constructive, but both sides are no closer to a resolution. President Putin accuses Europe of preventing peace, says if Europe wants a war, Russia is ready. Maruti Suzuki steps up the electric vehicle push, plans 1 lakh charging stations across India by 2030, promises several new launches as it outlines an expansive electric mobility roadmap. Amazon throws down the gauntlet to Microsoft, Google and the entire AI ecosystem, announces the next generation of chips, large language models and AI agents at its annual Amazon Web Services Summit in Vegas. Well, the big story we're tracking this evening, and it is the currency, the rupee breaching the psychological 90 to $1 barrier for the first time ever. Dealers cite limited intervention by the Reserve Bank and incessant dollar buying by foreign funds. The rupee has now fallen by almost 2% against the dollar in the last 2 weeks itself and by 5% so far in 2025. However, the rupee did see marginal recovery before it closed. For trade, Latha joins us now with more on the rupee. 90.19, the dollar rupee, that's where it closed for the day, Latha. The kind of free fall that we have seen, especially in the last 2 days, Latha, what do you make of it?
Well, first up, the support for the rupee came towards end of trade, late trade, not really end of trade, the last one and a half hours, with the market giving support. That's very important. It was not because the Reserve Bank lent a horrendous amount of, sold a horrendous amount of dollars at 90.29 that the rupee went towards 90.11 after that. It was because there was an exhaustion of selling. You know, that's how usually bear markets end. But that exhaustion of selling was probably triggered because of the chief economic advisor saying that he's not losing sleep over the rupee's fall. I mean, is this not the best of times for the rupee to fall? Considering that, you know, even if prices go up, we are not worried about inflation at this juncture. And that he expects a rebound very soon, probably next year. That was used as a trigger. But really, there was an exhaustion of selling also, because how many times do you sell over the same news? We all know about the October trade deficit. We all know that the trade deal has not come in. We all know that there is a BOP deficit for probably 2 years in a row. The BOP number for the second quarter came on December 1st, and that triggered the accelerated selling on 2nd and 3rd of December. But now all that is priced in. So with Reserve Bank and government both saying that, okay, let the market take its course, perhaps, you know, the bears, the rupee bears came in and covered their rupee short positions, or the dollar longs were unwound. The market is now convinced that the RBI also wants a market-oriented solution to the trade deficit. Once you let the rupee cheapen, then obviously exports will improve because they're price competitive, and imports become expensive. Anything has to be multiplied by, you know, 90 rupees plus for a dollar, and that makes everything from textiles to T-shirts to, you know, pharmaceuticals more expensive to import. That's the best competition you can have for the Chinese flooding. By the way, we must remember, we keep talking about the dollar rupee. The rupee to renminbi used to be about 11 up until like a year ago. And now it is 12 rupees 80 paise to buy a renminbi. So that also is a protection against, Chinese flooding. And finally, perhaps the view must also come to the market that a lower currency is actually a protection for the economy. It's almost like a rate cut. It gives domestic producers more breathing space. The message today is that the market has found its own level. That is why today's recovery of the rupee, albeit mild, is an important takeaway.
Well, Lata, we'll have to see if the rupee holds this level. Thanks very much for joining us. New record low for the rupee today. But let's talk about the stock markets, which also staged a recovery in the last hour of trade. The Sensex and the Nifty ending the day with marginal losses. The Nifty dropped below the 26,000 mark, but it did manage to defend the 20-day moving average, finally closing 46 points lower, 30 points lower on the Sensex. The Nifty banker just about in positive territory. The cuts were really coming in on the mid-cap side. That index down by about 600 points today. So that's where you saw the big moves. But the big newsmaker this evening, with less than 2 months left for the union budget, India Inc.'s wish list is only getting longer. Will exporters roiled by Trump's tariffs get any special attention in the upcoming budget? Will the recently notified labour code give Indian manufacturing the much-needed fillip? And what is India Inc. expecting from the RBI policy this week, and also from Russian President Putin's visit? To speak about all of that and more, we're now joined by Anant Goenka, who's just taken charge as the president of industry body FICCI. Anant, many thanks for joining us here on CNBC-TV18, and congratulations on taking over as president of FICCI. To start with, Anant, let's talk about the rupee. It's great to have you on a day where we've seen the rupee move, breach that $90 mark today. Anant, what's the mood within industry? As we've been arguing here that a depreciating rupee could perhaps be good as far as competitiveness is concerned, but the extreme volatile moves that we've seen specifically in the past few days, what does industry make of it?
Right. I think, as was highlighted, largely we've let market forces determine, as RBI and the government has been mentioning. To that extent, I would say exports have become more attractive. Chinese imports may become a little bit more expensive. I think large volatility is obviously something of a concern. But overall, I would say no major impact to industry. I think it's a positive from an export point of view. I think it's more about the RBI taking a decision whether they would like to intervene or not. And I think their decision is absolutely fine.
Well, speaking of the RBI, we've got the MPC meeting coming up. Anant, what's the expectation? Is industry hoping for a rate cut? Hope, of course, is always on the table. But do you believe that a rate cut is likely this time around, given the fact that we've seen some very strong GDP numbers come in as well?
Right. I think inflation has been under a fair amount of control, better than expected numbers. Government is gearing for growth. In light of that, from our side, we would say 0.25% basis, 25 basis points cut is very welcome. And that's what industry is rooting and hoping for.
OK, that is what industry is hoping for, another 25 basis point cut. The big development tomorrow, President Putin is going to be here in India, both sides hoping to further deepen their bilateral engagement, bilateral relationship, including economic cooperation. What's the expectation that industry has on this front?
India has always maintained its position of strategic autonomy. And to that extent, it is for us, or as industry, we are looking at strengthening our defense ties. This is something which we are already intertwined as two countries, and that is always going to continue in the longer term because of the strength between the two countries. It's a time-tested partnership that is there. We will be looking at seeing how can we supply more into Russia and vice versa. The obvious areas are engineering products, pharmaceuticals, IT, and so on. I think one concern on industry side is always going to be with respect to sanctions and that risk. But I think from an industry side, if the opportunity is there, we'd be very happy to look at Russia as a larger market to strengthen our relationship with.
You know, you talked about sanctions, and that brings me to the issue of U.S. tariffs and the possibility of a deal with the U.S. It was the FICCI AGM where I spoke with the Commerce Secretary, and he, for the very first time, said that there are two parallel negotiations underway with the U.S. But is hope now fading for either of the two deals to go through with the U.S., one to deal with the reciprocal tariffs and the other to deal with the larger bilateral trade agreement?
I think not at all. I'm still very hopeful of a deal happening. Commerce Secretary also was fairly positive that a number of the points have been discussed. It is hopefully a matter of time, and a deal is likely to be around the corner, although you never know till last minute or till the deal is signed that it's going to happen. I think on both sides, there have been some concessions, but India has very clearly stuck on its sensitive issues, always putting the country first. So to that extent, I'm hopeful that a deal will be signed, and that will be great for whether it is the rupee and an end to the tariffs that would be very good for certain industries.
Yes, the wait continues on that front. But speaking of suspense and the wait for the budget is on. Pre-budget consultations underway, and I know that FICCI's presented its budget wish list. What are you baking in terms of expectations, the top three priorities that you believe the government must focus on, Anant?
I'd say one is Atmanirbharta. I think continued focus on investing in defense. There is a large change that is happening with respect to technology on the defense side, and we need to continue to invest on that front. We've asked for a 30% increase in capital investment on defense expenditure, a 10% increase on operating expenditure, and about a 10,000 crore outlay on DRDO-related investments. The second ask is on export promotion. There has been the export promotion mission that has come about, various corporate guarantee schemes, but RODDEP, we feel the outlay is still too small. We have recommended an increased outlay on RODDEP. The third is the critical minerals program that has come about. On that, there is a minerals tailing recovery program that we are recommending, that use of fly ash, leftovers of the mining. How do we use technology to tap critical minerals out of the tailings? So a critical minerals program is something that we are recommending. And finally, on the electronic side, we've seen great headway and progress over the years. This is a space where we are recommending India's largest IT industrial park, where you can have the entire value chain in one place, increase the value addition, have OEMs and assemblers all together in one place, much like the model that we've seen in Shenzhen or Vietnam. I think that will further propel growth of the EMS sector.
All right. Well, we'll have to wait till for the 1st of February. It's a Sunday, but let's see if the budget is going to be on the 1st of February, and all will be revealed then. Anant Goenka, once again, wish you the very best of luck for your new innings, and thanks so much for joining us here on CNBC-TV18. That's the president of FICCI with his budget wish list and more. Time for us to head into a break, but up next, just months after getting relief from the Supreme Court, JSW Steel sells 50% stake in Bhushan Power to Japanese conglomerate JFE for over 15,700 crore rupees. That and more when we return. E-commerce platform Meesho's 5,000 crore rupee initial public offer was subscribed over 2 times on the first day. Retail investors showed strong interest in the offer, with their portion being subscribed 3.59 times. The quota allocated for non-institutional investors was also fully booked. The e-commerce major raised close to 2,500 crore rupees from anchor investors ahead of the IPO. But the big global story, a CNBC-TV18 news break now confirmed, just months after getting relief from the Supreme Court, JSW Steel sells 50% stake in Bhushan Power to Japanese conglomerate JFE for over 15,700 crore rupees. Nigel is here with the details of the deal and why the market seemed a little disappointed when the news initially broke. Nigel.
Well, that's right. A big deal coming in from JSW Steel, with JFE going ahead and picking up close to around 50% stake in BPSL. and for an equity value of around 15,750 crores, which would mean that the total assets equity value will be roughly around 31,500 crores. You put in there a debt of roughly around 5 to around 6,000 crores odd. So the enterprise value that this deal is being done at is roughly around 37,000 crores or thereabouts. Remember, BPSL, they had a debt of around 5,000-6,000 crores odd. And also in the first half of the year, the total EBITDA that they did was roughly around 1,500 crores, which means that for the year, on an annualized basis, they could do around 3,000 crores. Valuation-wise, well, the deal appears to be done at around 12 times EV upon EBITDA, which is fair. Pretty good valuation actually is what they have got. How does the holding structure change? Well, as of now, the promoter entity of JSW Steel had in their personal capacity close to around 17% stake in BPSL. And the listed entity, JSW Steel, had close to around 83%. Now, post JFE coming in there, JFE will have 50% stake in BPSL, and JSW Steel as well will have close to around 50% stake in the company. Now, going by the way the shareholding pattern is changing, out of the 15,750 crores odd of equity valuation that JFE will be putting in, well, it appears that JSW Steel will get around 10,300 crores, and the remainder could go to the promoter entity itself. Then why did the stock see some kind of selling? The street was sniffing a much higher number in the vicinity of around 45 to around 50,000 crores. And the enterprise value now is around 37,000 crores. So maybe some disappointment on the expected valuation out there. And the rationale of the deal as well is something that the street is coming to terms with. The completion is likely in the next 6 to around 9 months. So it appears it's a big boost actually coming in for JSW Steel. However, the valuations is something that the street is actually split on, which caused the stock to remain a little bit nervous.
Nigel, many thanks for joining us. The other big story, India and Russia all set to bolster economic ties as President Putin arrives in New Delhi on a state visit tomorrow. India is likely to push for increasing pharma, agri and textile exports. Prime Minister Modi and President Putin will also discuss a free trade agreement which could be signed in the future. Parikshit joins us now to take us through what is on the table. Parikshit, what can we expect?
Well, economic cooperation and having closer economic ties with Russia will be India's #1 priority during this visit. Both sides recently initiated discussions on an FTA between India and the Russia-led Eurasian Economic Union. We're not expecting any finality during this visit, but yes, the discussions between President Putin and Prime Minister Modi are likely to put those discussions on a fast track. There is a massive trade deficit when it comes to the India-Russia partnership. The FY25 trade numbers are to the tune of around $68 billion. India's exports to Russia were just about $4.8 billion. The trade is largely in Russia's favor because of India's large-scale dependency on Russian crude. So what India is going to convey during this visit is that Indian exporters must get more market access in Russia, and Russia must buy more. So be it pharmaceuticals, be it textiles, be it agriculture products or steel, we would like Russia to be a bigger buyer of Indian goods. And therefore, discussions on more local currency settlements, trade facilitation, economic cooperation, healthcare, all these MOUs or a package of agreements supporting economic cooperation are likely to be signed during this visit. A key outcome will be the MOU between India and Russia on migration and mobility of skilled professionals. We've seen a large number of Indians going to Russia for employment, a lot of them getting trapped and ending up serving the Russian army against Ukraine. So we don't want that situation to arise. We want to have avenues for legal migration from India to Russia. So that will be the highlight during the visit. In terms of the defense partnership, while it's very, very critical, there will be continuity. We'll explore cooperation in co-production, co-development. There will be a strong pitch from President Putin to sell, co-produce and further develop the Su-57 fifth-generation fighter jet. But India is going to make it very clear that we've not taken any decision on either Su-57 or F-35s, and there cannot be any discussions even at this juncture. On the oil trade, we've seen November oil imports from Russia at an all-time high of almost 1.9 million barrels per day. This is because the sanctions were coming into effect on the 21st of November, and there was front-loading. Post that, we are seeing from analyst reports that the oil imports from Russia from non-sanctioned entities is to the tune of 800,000 barrels per day. This is likely to continue till larger secondary sanctions are imposed by Russia. So the oil trade is likely to continue via the non-sanctioned entities. Overall, India and Russia would like to signal continuity of the larger strategic partnership between the two nations.
All right, Parikshit, many thanks for joining us. And do remember to tune into CNBC-TV18. Parikshit will be tracking President Putin's visit to India. And staying with the Russian president, President Putin and negotiators from the US appear to have failed to achieve a breakthrough on securing a Ukraine peace deal. Now, Putin met with President Trump's special envoy, Steve Witkoff, and Jared Kushner for nearly 5 hours. Remember, the Secretary of State, Marco Rubio, not present at any of these meetings. Russian officials have said the talks were constructive, but no compromise was reached over territorial concessions for Ukraine. Putin has accused Europe of preventing the US administration from achieving peace on Ukraine. He added that Russia is ready for war if Europe starts it. Now, the government has withdrawn its earlier directive to phone makers, which had made it mandatory to preload the Sanchar Saathi app. That's the state-owned cybersecurity app. Now, the U-turn comes days after the Telecom Ministry's order raised concerns over possible snooping or mass surveillance. Responding to the Congress MP Deepinder Huda's question in the Lok Sabha today, Telecom Minister Scindia said that even if the app has been installed, it would not be operational unless the user registers on it. But post that intervention in Parliament, the government has now decided to withdraw its directive asking for the pre-installation of the app to be made mandatory.
जब सिस्टम के अंदर प्रीलोड की रिक्वायरमेंट होगी तो डिसेबल करने के बाद भी सारे फीचर्स डिसेबल होंगे कि नहीं होंगे किसी यूजर्स को ये बात पता नहीं चलेगी। तो कहीं ना कहीं ये जो एक अधिकार है निजता का उस पे कोई बड़ा प्रहार तो नहीं है।
क्योंकि ऐप फोन पे है इसका मतलब नहीं है कि वो ऑटोमेटिकली ऑपरेट हो जाएगा। जब तक मैं उपभोक्ता के रूप में उसमें रजिस्टर ना करूं तब तक वो ऑपरेट नहीं होगा। और मैं उपभोक्ता के आधार पर जैसे मेरे फोन पर सर ढेर सारे ऐप्स होते हैं, मैं उस ऐप को भी दबा के मैं डिलीट कर सकता हूं। तो ये लोकतंत्र में पूर्ण हक और अधिकार नागरिक का है सर।
कहीं ये जो स्नूपिंग के प्रश्न उठ रहे हैं पूरे देश में, इसको लेकर सिविल राइट्स एक्टिविस्ट से कंप्यूटर साइंस एक्सपर्ट से उनको लेकर मंत्री महोदय क्या कुछ कहना चाहेंगे?
फीडबैक हमें मिलेगा, उस फीडबैक के आधार पर अगर उस ऑर्डर में भी हम लोगों को कोई चेंज लाना है उसके लिए भी हम लोग तैयार हैं। ये मैं अवश्य कहना चाहता हूं कि इस ऐप के आधार पर न स्नूपिंग संभव है न स्नूपिंग होगा।
Ready to act on feedback. That was the telecom minister. And as we pointed out, the government now issuing a statement saying that the pre-installation is no longer mandatory. So it has withdrawn its previous directive, making the pre-installation of the Saathi app mandatory. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. We're back in a minute with more.